back. You're watching Indian Open right here on BloombergQuint Live. Asia as a pocket is trading weak and following suit to what the US markets did over last night, as well as the fact that we've missed out one day of trade. You may actually not see the move that the SGX is showing you right now, which is up about almost 0.5%. So you may account for 1 day of missed trade that we've already seen for yesterday. But aside from that, earnings is going to take center stage. Now we're going to kickstart earnings with TCS and IndianOpen, not today, but I think tomorrow after market hours is TCS, so we'll be watching out for that.
Yeah, and very close to the 50-day moving average, so maybe look out for that as well, Devina.
11,087.
Yeah, so that's a key level to monitor too.
Yeah, so we'll be watching out for all of those factors. Also, we'll be watching out for what's happening in the derivative space. Navneet is joining us with more details. Navneet, good morning.
Good morning to both of you. Well, it's not been a great week rather, or last 6 to 7 trading sessions, because the Indian markets have been falling for last 6 sessions. Nifty has fallen about 450 points so far in last 6 days. Just to give you a sense, on Monday, Nifty futures closed around the levels of 11,162. SGX Nifty currently trading around the level of 11,138, giving you an indication probably we'll open 25 to 30 points lower in trade. And very quickly, what happened on Monday's trade, though the markets were down, remember we didn't see any additional fresh short positions being added on both Nifty or, for that matter, Bank Nifty futures. For Nifty futures, it was just about flattish. Premium remained at level of 35, and for Bank Nifty, premium came off to levels of about 100. There was in fact unwinding of about 12%, and remember, Bank Nifty throughout the session outperformed, so there were signs of short covering which took place for Bank Nifty on the futures side. Nifty PCR, however, continues to remain below the mark of 1, indicating markets could be in an oversold territory. So let's see, there are shorts in the system. Definitely, if there is any signs of recovery, we can see that sort of rally coming about. But on Monday, PCR fell below the mark. It was already below the mark of 1, but the closing was at 0.95. On the options front, if you look at the distribution now for this Thursday expiry, which is scheduled for tomorrow, 11,500 call is where maximum open interest is. And on the put side, it is 11,000. So the range is quite wide, but the trend has been similar in the last few sessions where more of call writing has taken place. So similarly, on Monday, you did see call writing significantly coming for levels of about 11,200, and the index currently trade below that mark. On the stock futures front, there were a lot of stocks in focus, and there were some bit of short covering also seen for a couple of stocks. But Nalco saw fresh long. The counter closed with gains of 3%. Aurobindo Pharma saw fresh short positions. The counter was down 20% in trade, and short positions also seen for Ramco Cements, and short covering seen for something like Shriram Transport, which was up about 4%. Some sigh of relief, in fact, if you look at the FI data, though they continued selling in the cash market, but in the F&O space, there were some long positions being added, at least on the index futures side, and unwinding of shorts also took place, whereas on the index options side, there were unwinding of shorts once again, but longs were added on call long as well as put short side. With that, it's back to you guys.
All right, Navneet, thanks very much for that. So watch out for all of those cues that were just highlighted. And with respect to a few stocks that you need to watch out for, as usual, watch out for your auto names. Remember, you've got a whole slew of updates with regards to companies that have cut production days, JLR numbers, so watch out for that. Actually, there's a little bit of a silver lining with the recovery in the Chinese market in the month of September.
For Tata Motors, for sure.
Tata Motors,
so monitor that as well. But more importantly, Devina, I think also important to see what will happen to some of the financials, simply because of the kind of cuts that we've seen all through the last few weeks and in Monday's session as well.
So 15% from the announcement of the corporate tax, and I think they've given up almost 7.5. So almost a 50% retracement already in the Nifty Bank with regards to the kind of surge that you had seen.
Yeah. And cooling off quite rapidly. Actually,
and you can't pinpoint a culprit, because I think private sector banks and PSU banks both have been equally damaged.
Equally damaging. And Pankaj, Pandey, come in on this conversation because even the NBFCs are not seeing any respite. The likes of Edelweiss, Piramal, etc. are continuing to falling. What's happening within this pocket? Good morning.
Hi, good morning, Niraj. I think in the entire BFSI space, if you look at select NBFCs like Bajaj Finance, I think will continue to come out with a decent set of numbers. Although the numbers are slightly lower, so company was delivering more than 40% kind of AUM growth. This quarter we'll expect a slightly lower growth. But I think the troubled names, the kind of exposure what they've got to various sticky assets, I think continues to sort of an overhang. On the banking side, again, since provisions are going to remain sort of elevated, we are not expecting extra provisions. So numbers will actually look good for banking as entire pack, whether you look at it in terms of credit growth, whether you look at it in terms of NII growth, which we are expecting about 17% and even bottom line growth for banks.
Okay. Pankaj, did you track Aurobindo Pharma's move on Monday and the clarification that the management has given? And do you feel that post the 20% correction, Aurobindo now is better placed with regards to being a value buy in terms of risk reward as well?
I think, see, what one has to look at in case of Aurobindo is that they've got one of the biggest exposure on the US, and Unit 7, which is where the observations have come in. I think that unit contributes about 25 to 30% of their US overall turnover. So from that perspective, the development is significant. Now, whether that translates into a warning letter or an import alert needs to be seen. What the market is factoring in at this point in time, given the correction, what we have seen is import alert. But in case if we get a warning letter, then probably we would expect some bounce in the prices. I think till the time you don't get a clarity, we would expect the stock to remain under pressure.
Okay. Stay on with us, Pankaj. Lots more to talk to you about, but let's also focus on a few other stocks that are making news. We spoke a little bit about Tata Motors, Titan, what's happening there with regards to their quarter to update and what's the likely impact on the stock. Let's talk first about some stocks in news, Nikki.
Aurobindo Pharma, we saw a sharp reaction coming on the counter on Monday. That's a 20% downtake after Form 483 was issued for one of its important plants, Unit 7 out there. The company has come out with a clarification stating that these are not related to data integrity, and the company is confident of addressing them within a stipulated timeline. Most of the brokerages make out that they say that the stock reaction is a bit overdone right now, and at this point of time, at the current level, it looks like a risk-reward ratio. Tata Motors, some recovery out there. JLR, where Jaguar's September sales number, they are down by 15.2% for the month of September. Land Rover, on the other hand, is up by 6.9% just for the month of September. But if you look at the quarterly numbers out there, JLR sales are down by as much as 0.7%. There's a bit of recovery if you compare it on sequential basis, but then YOY basis again, the numbers are pretty bad because it comes on a lower base. Indiabulls Real Estate and Indiabulls Ventures, where the companies are going to be considering buyback of equity shares on October 11. So one can expect a stock reaction on this one. Lakshmi Vilas Bank, where Talwarkas have defaulted on payment of 2.38 crore interest on borrowing of more than 450 crore. And last in the list, we have Minda Industries, which is going to be acquiring a 100% stake of Delvis Group for a consideration of around 164 crore. The company is pretty much engaged in automotive lighting, design and engineering. The transaction is expected, is subject to appropriate regulatory approvals and is expected to be completed within a span of 2 months.
All right. Thanks a lot for that, Nikki. Titan, and the quarter two update doesn't seem to be very festive enough.
Well, definitely not encouraging trends, because the commentary is certainly weak, specifically with respect to the jewelry segment, which contributes to over 4/5 of the consolidated revenues. Well, the management suggests that there was a very sharp fall in terms of sales in the month of July. They did cover up in the subsequent months, that is August and September, and because of that, they eventually saw retail sales grow by as much as 7%. However, they did have a lot of hedges which matured in the period, which is why the revenues for jewelry fell by as much as 2%, while on a consolidated basis. Watches growth also moderated to 7%, and eyewear, however, it's a small segment, but it did see a robust growth of around 28%. That said, based on this update, Citi has downgraded the Titan to a neutral and, of course, also cut the price target. The price target is at around 1,370, and HSBC has trimmed the target to around 1,410 from 1,450, but maintains a buy. But on the whole, the commentary may not augur well for the stock in terms of trade today.
Interestingly, Bhaskar Bhatt also said that for the first half, it's a bit unpredictable, but the second half, things will start to
could very well change, yes.
Yeah. Thanks, guys. Thanks a lot for that. Pankaj, let me come to you on Titan. What's the take here? What would you maintain in terms of whether or not this is a good stock to hold in the portfolio?
So I think what we have seen is that you had a 20% increase in gold prices, and that had an impact on their July sales. However, if you look at from August onwards and September, there's been a double-digit increase overall in terms of their volumes. So which is good, and typically what we have seen is that, and even the management commentary has been that whenever you see a sharp spike in gold prices, the volumes take a hit initially, and then people adjust to these higher prices. Now, since August and September were good, our sense is that going forward in the second half, things will be a lot more better because you have a lot more festive days compared to H1, and which is why we would want to believe that the stock is a good stock to hold from a portfolio perspective. Plus, they've been sort of addressing some of their structural issues in terms of higher proportion of jewelry segment. So they've been launching products on the jewelry side for the wedding season. So I think that also addresses one of the structural concerns compared to the rest of the industry. So I think if there is any weakness in the stock, one should lap up the stock because I think structurally they are placed quite best in the overall industry, and industry is going to sort of get more organized going forward. The way the trend has been the last few years, while the industry growth was flat, the Titan has been delivering double-digit kind of a growth rate.
Okay. Let's also get in some technical opinion. Gaurav Bissa of LKP Securities is joining us on the show right now. Chandan Taparia of Motilal Oswal Financial Services is also there with us. Let's start off with you, Chandan. First off, on the index, very close to that 50-day moving average break, 11,087. That's a crucial level on the index. What would the trade look like?
Yes, very good morning. The market is continuously falling down from last 6 trading session and started to form lower top, lower bottom. It is almost wiped out the 50% gain of the previous swing rally of 10,650 to 11,700 zone, and now it has again come back to the key level of 11,111. Earlier it was finding hurdle at 11,111, and after breaking the same it rallied, but again it has come to the same, which clearly indicates that buying interest is visible at the decline, but follow-up is not missing. So as of now, I'll continue to be with immediate weakness in the market. Started to form lower highs, lower lows, so till it doesn't surpass 11,250 zone, we are expecting it to go down to test the next level of 11,000. In fact, on the options data, we have seen significant call writing at 11,200 strike, but at the same time, put writing is also visible at 11,000. That's why we are expecting it to take hurdle at 11,250 and drip towards next major support of 11,000 zone.
Okay. Gaurav Bissa, what about you?
Good morning. If you look at last few days' data, then yes, we have seen some amount of shorts getting built not only in the indices but also in the heavyweights. But a good part of correction has already been seen from levels of 11,650, 11,700. We're now down towards 11,100 levels. And as you mentioned, the 50 DM will also play some role. If you look at the options data for the current series as well as the next weekly series, the supports are placed anywhere around 11,050 odd levels. And I would just like to make a note that if you look at the next week data, then the data is not very huge. If you're talking about only 100,000, 200,000 positions being built on a particular strike. But nevertheless, the mindset, it looks still the same, that 11,050 can act as an immediate support area for the index, and we can see a bounce back sort of coming in. On daily chart also, if you draw a falling trend line, the support also would come around the same levels. So in my opinion, any dip, 30-40 point dip in the market from the closing price would make it a lucrative opportunity to go build fresh long positions. I would agree with Chandan on the fact that as long as we are trading below 11,250, markets are not going to pick up pace, but we can play for a bounce back, buy around levels of 11,080, 90, keep a stop loss of 11,030. On the upside, 11,220 is the level that I would be playing for. Once we have a close up levels of 11,220, 11,240, then we can play for higher targets. But for now, I think the risk toward first shorts is not that lucrative. If somebody intends to create fresh shorts, use rallies to create fresh shorts. But at these levels, there can be a technical bounce that can be expected anytime soon.
Mm-hmm. So Gaurav, in light of this, while you're giving those option strategies for the index, stocks, again, you are being cautious because you have one buy call and one sell call.
Yes, if you look at last few interactions that we have had, I have been giving, I would not call it as a hedge trade, but I would call it as a balanced trade and balanced approach for the reason that any rise in the index, we are seeing some amount of pressure at high levels. On the other hand, at the lower levels, we are seeing a technical bounces being played. And the kind of volatility that one has in the market, I think forming a very strong view at this point in time becomes very difficult because if you play with stop losses, they are getting triggered. So the more logical thing would be to start buying things that reversing from the strong support area and you sell names that have given fresh breakdowns or where the trend is predominantly weak. So on that front, I have recommended the Jubilant Foodworks. So we've seen a strong correction already been seen. We have seen a small bounce coming from levels of 1260, 1270. This is also the breakout area, and we are seeing short coming also around tune of 3%. That again is a positive sign. That's formed a bullish piercing that again is not a very strong but a reversal candle on the daily chart. So that again is a positive sign. With the stop loss of 1285, one can buy for target price of 1345, 1350. Among the weaker names, LIC Housing is looking weak. Consistent short positions getting built. It gave a strong breakdown on weekly charts below levels of 380. So as long as it's trading below levels of 380, we can see a very, very, very strong correction coming in the name. But for timing, how do you play to keep a stop loss of 380? Play for targets of 360, 355. Targets would be deep, but giving a very large target would not be very wise. But yes, it's the name that on every rise, one can initiate fresh short positions on LIC Housing Finance.
Three varies used when talking about the bearishness on LIC Housing Finance by Gaurav Bissa. Chandan too is playing it safe or a mixed bag, a buy call and a sell call from your end as well, Chandan?
Yeah, that's true. Actually, the market is finding selling pressure, and again, multiple support are also visible. Couple of names are outperforming the market, but most of the mid cap, small cap, and heavyweights are finding pressure. So, looking at that setup, we selected to one buy, one sell. On the buy side, first is buy on Berger Pen. Comparatively, we have seen multiple support near to 420 to 425 zone in this counter, and one of the strongest counter. At the time of market decline, it just consolidated, and at the time of recovery, it witnesses the strong rally. Major trend on the weekly, daily is the positive, and the price setup suggests the stock has potential to head towards the new high territory. We have seen built up of long position, rollovers are also positive, and the sector is also doing well comparatively. So recommending to buy Berger Pen with stop loss of 425, and this stock has potential to move towards 450 to 455 zone. Second trade that is on the sell side from the metal peg. We have seen selling pressure in most of the metal counter, and here we are recommending to sell on Tata Steel. This stock is forming the lower highs, lower lows, and given a breakdown on the weekly scale, and also given the recent lower daily close, the stock is trading at multiple months low level and built up of short position and clear call writing at this stock at higher strike, at current strike, can take it to lower level. So recommending to sell on Tata Steel with a stop loss of 336, and here we are expecting a downside move towards 308, 305 levels.
Okay. Stay on, gentlemen. Lots more to talk to you about, but in the meantime, on to a special segment. Bloomberg Edge by Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we are looking at Colgate Palmolive, and there is a sell signal which is generated by the MACD indicator. Now, like we always do, let's first try and understand what the MACD indicator is and how do you interpret it. The MACD, as you know, is a trend following momentum indicator, and it shows you the relationship between the two moving averages of the price. How do you interpret it? You go long when the MACD line crosses above the signal line from below, and you go short when the MACD line crosses below the signal line from above. Now, coming back to the price chart of Colgate, and in the lower panel over here we have the MACD indicator, which has given that negative crossover where the MACD line, which is the one in the blue, that has gone below the white line or the signal line after we saw this big jump. The big jump that I was referring to came after the announcement of the tax rate cut, and then we saw this big up move where the stock managed to break out of its tight range of 1100 on the lower side and 1300 on the higher side, and then it went up all the way in excess excess of 1500 as well. But over the last few trading sessions, we have seen that exhaustion being played out, and then the stock has come off from the highs of 1500 plus to now down to about 1465. And at this level, the MACD indicator, despite the stock closing higher on Monday, has given a negative crossover, which indicates that the risk to reward ratio is also favorable and that the stock could see further downturn. The RSI 2 in the lowest panel over here, that had crossed above the mark of 70. Now, the last time it did so was over a year back when it had crossed above the mark of 70. So the red line over here, that indicates that the stock has been overbought, and now that there could be some amount of pullback that we could watch out for as far as Colgate Palmolive is concerned.
How has this worked in the past, Yash?
So not often do I recommend, or do we look at stocks where you give a sell signal, especially when it has ended the day at the highest point on Monday. But still, 6 out of the 7 times that the indicator has given a negative crossover, the stock on an average has managed to close 7% lower. So the hit rate is very favorable as far as Colgate Palmolive is concerned.
Yeah, let's wait and watch if it does react that way. Yash, thanks so much for putting that into perspective. That's the Bloomberg Edge for the day today, Colgate Palmolive. Now, I want to talk about 2 or 3 names. The 2 pharma names that came off quite rapidly in Monday's session. Pankaj, what's the call on both Glenmark as well as Aurobindo Pharma? What should people do here if they still have the stock in the portfolio?
So on Aurobindo Pharma, like I said, till the time we don't get a clarity on Unit 7 whether it is going to be import alert or the market is factoring in that the company will get import alert on this plant, and that contributes about 25-30% of their overall US sales, and US sales is one of the biggest for Aurobindo. I think if we don't get an import alert, we would expect stock to bounce. So till the time we don't get clarity, my sense would be that the stock would remain under pressure. I think for Glenmark, the challenge has been that the company has been sort of doing a good amount of R&D, but has not been able to sort of monetize. And in this process, they've become balance sheet heavy, and which is where the challenge is. So unless some monetization happens, I would expect the stock to remain under pressure, because with the kind of margins what they're clocking, a good portion of that is going to go towards debt servicing, and which is a challenge for you don't really want a company in a sector like pharma to be heavily leveraged, which is where I think the challenge has been. So both these stocks are sort of wait and watch at current levels.
We're going to start earnings this week, Pankaj. First off, IndusInd Bank last quarter was a big disappointment because of the few accounts that they, did not push into, the NPA category. They did not provide for those accounts. They kept them as regular accounts, which the street was hoping would get transferred into a provisioning account. That didn't happen, and therefore the stock fell post the earnings call. What do you think happens this quarter to the likes of an IndusInd Bank and even TCS, which reports tomorrow post-market hours?
So on IndusInd, the numbers actually will not be comparable because you will have Bharat financial numbers included in it. So which is why the NII growth could be about 35%. And I think commenting on the asset quality front would remain a key. But I think a lot of price damage has already happened, so which is why I'll have a positive bias on the stock. Then I think on the what is the other stock? Sorry, forgot.
Yes, TCS.
Now on TCS, for IT, this is a seasonally sort of a strong quarter, but given the currency headwinds, we would expect that the company will deliver about 1.7% kind of a dollar revenue growth on a quarter-on-quarter basis. And Infi is expected to do slightly better. So our pick always has been Infi compared to TCS, because we expect that the Infi will keep delivering better set of dollar revenue growth going forward as well. But within the tier ones, I think these are the 2 names one can look at, because the other 2, Wipro and HCLTech, the organic growth is below 1%, which is not really encouraging, despite the fact that both the stocks are quite attractively priced. But within the tier 1s, I think Infi looks far better than TCS.
Quickly on Britannia, Gaurav, Bissa. I mean, it's managed to make a comeback, inching towards that 3,000 mark once again. Would you be a buyer?
Well, it depends what your time horizon is. I would be a buyer if it's about intraday trading or maybe for 2 or 3 day trade. You play for another 100 points up move from the current price, then yes, I would be a buyer. But if somebody wants to play for a trend reversal, then I don't think so. It has been trading in a falling channel and taking strong resistance here at those levels. So any jump towards the level of 3,060, 3,070 would again see a lot of resistance. Unless it does not close above this level, I would be a seller. I would recommend short on rise. But if somebody intends to buy for a couple of days, and yes, on intraday charts or hourly charts, you have seen a small breakout sort of happening. So that can be a 60, 70 point of move from the current prices.
Yeah, the interesting ones would be two pockets. One, the new listings and how well they continue to do, if they continue to do well. At the other end, it'll be interesting to see what's happening to Edelweiss and Piramal today as well.
Yep, and also, the last few days and the focus on the SL Group stocks once again comes to light. So we'll see all of these stocks and how they react. But for now, keeping it with the setup in the Asian markets, SGX Nifty though is up about 1/3%. May not see the full impact of that as we open up this morning because we missed out of trade yesterday. So Asia as a pocket is looking weak. In the next few seconds, we'll get the open for the index. That's the SGX Nifty for you, and also keep a track on the weakness of the currency, which we've seen over the last few days as well. The Nifty 50 opens up, all right, almost mirroring the SGX Nifty. In fact, higher than that, but these are just initial ticks, may not sustain. You've got individual stocks to watch out for. Starting off first with some losses coming into Titan, about 8% lower. This also may not stick, but Titan is showing you an 8% downtick on its quarter 2 update, and the update on the jewelry business suffering a bit this quarter. Then you've got Tech Mahindra down 1%. You've got ONGC down 1%. Z is lower at 249. Aisha Motors, Sun Pharma, Power Grid, HCL Tech are all losers in trade today, and so is Maruti Suzuki. That stock's down about 0.5%. Amongst the gainers, Bajaj Finserv is showing an unnatural 10% move on the upside. Tata Motors is up about 2.5%. M&M, Gale, Hero MotoCorp, Indian Oil and Reliance Industries at 13.21 is up closer to 1%. Britannia, again, 0.75% higher, so gradually inching up. And the likes of a Bajaj Finance too doing okay for itself, about 0.5% higher, so just around that 4,000 mark. For the currency, weakness is prevalent over the last few days. We've seen a drop in today's session too, another 0.25% drop on the currency, so 71.21 on the rupee versus the dollar.
I want to see what Aurobindo and Glenmark are up to. Aurobindo, is it showing any signs of a recovery after the company comment? Well, maybe it might recover a bit. Brokerages, and we'll get to brokerages in just a moment from now. But brokerages have been mixed bag, largely positive, but let's wait and watch. Glenmark, about 1.5% lower at the beginning, so let's wait and watch what happens here. In Dish TV was again a stock in focus. Let's see what that is doing in the session today. Spandana Spurti had some gains. Let's see if that is showing any kind of gains in the session today as well. We'll await for some major reactions on specific names. Century Textiles is showing this downtick. Let's wait and watch. And of course, do watch out for DHFL and HDI. And HDI is a tiny toon penny stock, but might continue to fall. Let's wait and watch. DHFL is the other one which might have a collateral damage. So let's see what happens there. Interestingly, just one quick mention here. The pre-open rates might be deceptive, but Indiabulls Housing, Indiabulls Ventures, maybe on account of that buyback announcement that seemingly has come out, the Indiabulls Group stocks might be in focus today as well. Indiabulls Real Estate should also come up on your screen. Let's see what that is doing in the session, about 5% higher. Anyways, as we said, Aurobindo Pharma was that big stock in Monday's session, saw its biggest fall in a decade. After the Unit 7 got 7 observations in the Form 483 issued by the US FDA. What are brokerages making of this move? Darshan is here to tell us that. Darshan.
Yeah, so Nirav, just to mention that, Aurobindo has clarified that, there are no data integrity issues, while a lot of analysts and, media organizations had indicated this is borderline issue, but it made it borderline data integrity, but it all depends on how the US FDA looks at it. And majority of the brokerages that have come out have indicated that, there there are issues, but they believe that there has been a big overreaction on the stock price. So Citi is saying that the stock reaction is overdone, but the overhang will persist. Inadequate out of specification issues are the key factors behind escalation of the compliance. Remember, Lupin also had the similar case in which they got warning letter for two of their plants. Edelweiss is saying that the observations look a little serious in nature. The observations are also recurring in nature, and the probability of escalation into these observations into an OAI or a warning letter does persist. MK is saying that the market seems to be pricing in the worst case scenario, that is an import alert. The FY21 EBITDA hit won't be material in case of a warning letter, but in case this turns out to be an import alert, yes, there will be a major impact, but the observations will remain a overhang in the near term. Goldman Sachs is saying that the scenario analysis suggests that the stock price movement has been overdone, and JP Morgan is also saying that they are recommending their clients to buy this counter for the upside of the Sandoz deal, and they believe that the risk reward is favorable for Aurobindo at this point of time.
All right, and it is reacting to those clarifications by the management. Stocks up about 5.5% in pre-open. Coming to you, Pankaj, just give us a sense of what to do with these Indiabulls group stocks. While there is still with some investigation going on with regards to, the Corporate Affairs Ministry investigating into all the three companies, Indiabulls Housing Finance, Indiabulls Ventures, Indiabulls Real Estate, and you may see by the end of the month some details coming out of that. But the management is extremely confident with regards to the cash positioning, and they've spoken about prepayments of NCDs, now this buyback. So, I mean, they're really backing what they're saying in terms of making sure that they have enough and more liquidity. What does one do now if they have these group stocks?
So, see, we don't have a coverage on all the three group stocks, but I think our experience has been that in case if there is a crisis of confidence in a particular stock, and especially in a BFSI stock, and if the fund requirement sort of goes up, because typically across PACs, if you look at banks or NBFCs need funds at regular intervals. Now, what happens is that when you are sort of going to raise fund, the dilution happens quite significantly, and which is where the equity value of the existing shareholders erode. So, with something like Yes Bank is a classic case. So, somewhere down the line, our sense is that it does not make sense to sort of hold on to these stocks. Probably, I think whenever we have clarity in terms of fundraising being done or fund being raised, I think that is a better time to sort of look at these troubled names.
Okay, let's get in some chart checks as well. Obviously, this is a falling knife right now, and there's a lot of uncertainty around all of these group stocks. But would you take a contrarian trade on any of these names, Chandan, Taparia?
No, I'll avoid to take the contrarian trade because most of these stocks are continuously falling down and breaking their major support zone, and it's very tough to catch the falling now, especially when market is also surrendering and missing the follow buying interest. We have seen the negative advance decline in the market as well, so breadth is also in the pressure, so better to avoid with these stocks. And my only suggestion is be with the selective counter which has potential to outperform in the market. So that's why better to be with selective paint, FMCG, insurance company or consumption theme where the risk is limited and potential to relative outperformance is more in the market.
The big stock of the morning has to be Titan. Even on the Nifty 500, Titan is the third worst performer as we approach the end of the pre-open session. Now, we've spoken about this fundamentally. Now that there is a 4.5% downtick, Gaurav, Bissa, I want to understand if you would go out and trade a Titan this morning, either direction.
Well, to be honest, we were negative on Titan at a little bit high levels. It had formed a bearish harmonic pattern, and it did correct from those levels. But again, it depends where it opens. If it opens anywhere below 1240, I think that can still be used as a fresh short positions. If you look at daily charts, apart from the harmonics, if you look at daily charts, if you follow Ichimoku setup, the Kijun, the heart of Ichimoku, that is flat. And as long as that is flat, it has a tendency to pull price towards itself. And that comes around levels of 1185, 1190. So in my opinion, with the kind of data that you have put, I think there's a chance that it may go towards the level of 1190, 1200. So any dip towards 1240 that can still be used as a shorting opportunity. Keep a stop loss of 1255, play for levels of 1200 to 1180. But if it opens on a very gap down node, then I would be a little bit skeptical. Then I would wait for a Kijun bounce, which generally means if prices for any reason, if it opens very much lower, it comes around levels of 1195, 1190, then I would be a buyer. Keep a small stop loss of 1170. If you see a very strong bounce towards the level of 1230, 1240, there's a good probability of that.
Gaurav, just wondering, it is likely to start off at about 1200 on the spot.
That is what I said. That, it depends where exactly it opens. But if it comes towards 1185, 1190, then I think it makes a good case to buy, because generally it takes a lot of efforts to break below the Kijun. We can have an intraday dip of 10, 12 rupees here and there. But eventually, I think there can be a good bounce that can be expected from levels of 1180, 1185.
You know, Devina, our stock to monitor could well be India Cement as well. Morgan Stanley's note, I think, of October 8th says that their channel checks indicate a potential price hike in the near term in the region. So, of course, but they have made this note citing India Cements as a stock in which they probably want our view. They believe that the sustainability might be difficult, but there might be a near-term price hike. And that's probably gotten India Cements excited. The reason why it's interesting also because we haven't heard of too many bullish tones coming out for the cement companies in the recent past.
You know, and Nikki's dealer survey, which she did just a few weeks back, suggested that particularly in the southern region, you're seeing the prices coming back, but you can't say much with regards to the rest of India and what happens there. But also the fact that now monsoons have retreated, you may actually see some firmness in prices. And if that tends to happen, then all of these stocks will start to do well.
Yeah. What about India Cements, though? If it starts off 3% higher, Chandan, Taparia, very quickly, would you trade this one?
Yeah, expecting some sort of bounce back in the counter, and it has taken multiple support near to 79. So because of the support is 79, we may see a bounce towards 84, 85 levels in the counter.
Z is the other one. Monday's session saw a big intraday swing for Z. I think almost 22% intraday was the move, where it hit lows of about 202 odd. From there, it finally closed higher, nearing 250 odd. Do things change materially now, Pankaj, Pandey, for Z?
I think, fundamentally, if you look at, we would expect this quarter to be slightly soft because Z was delivering ad revenue growth of nearly 25% compared to industry growth of over 12%. So this particular quarter, we are expecting a softer set of numbers in terms of ad revenue growth being in single digits because of the overall sort of slowdown. But I think till the time you have debt overhang of the promoters and it is not getting resolved, I think we would not expect a meaningful bounce in the stock. So which is why besides trading opportunity, fundamentally we will not be chasing the stock.
Okay. Just minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Maruti Suzuki has cut production for the 8th straight month in September. Production for the month fell 17.5% compared to last year.
Higher gold prices continue to weigh on jewelry sales, according to Titan's quarterly update. The company had guided for a 22% growth in FY20 for its jewelry business.
Aurobindo Pharma says none of the 7 observations in the Form 483 are related to data integrity. Company is confident of addressing them within the stipulated timeline.
Tata Motors in focus as Jaguar September sales declined 15.2%, while Land Rover sales rise by 6.9%. China sales continue to recover in the September quarter.
Minda Industries will acquire 100% stake in Delvis Group, which is engaged in automotive lighting design and engineering. This deal is worth 164 crore rupees.
Lastly, Indiabulls Real Estate and Indiabulls Ventures to consider a buyback of equity shares on October 11th.
Well, the Indiabulls Group is certainly up and active in the session today, so do watch out for those stocks as well. Pankaj, if you were to put fresh money to work currently, what is that one non-Nifty 50 stock that you are convinced about?
So for example, within Nifty, I think Bharti Airtel looks quite attractive. In the non-Nifty side, if you look at, I think Bata is something which we are quite positive about. Given the fact that the company has been increasingly looking at launching more higher value-added products, and which is where we would expect that the margin profile will keep getting better. Besides that, Trent is something which we continue to like because the company has got one of the best templates on the retail side. and they are pretty aggressive on the retail store expansion as well. So I think these are the two names which are looking quite attractive.
Okay, Bata and Trent, those are the two names to watch out for. Before we actually start taking top calls from our experts, just want to quickly take a check with regards to what's happening to the bond market yields, because we didn't take it at around 9:05, and that's the time we actually seen post the policy announcements. You've seen the yields come off, now about 6.46. Remember, they had gone all the way up until 6.7. And from there, it's starting to come off. But 1 minute left to go for market opening. Let's get you to those top trading calls from our technical experts. Gaurav, Bissa, why don't you start off?
I would go with LIC Housing, the kind of breakdown, multiple breakdowns, consistent shorts it has seen, and there's a very strong gap that can be filled. So in my opinion, that is more of a safer trade. One can keep a stop of 380 on the downside, 360, 355 would be the immediate setup. And this is one that should be on the radar. Chandan,
Taparia, your top call for the day?
Yeah, I'll go with Berger Paint. The stock has potential to hit all the recent highs towards 445 and 455. So recommending to buy with the stop loss of 425 for the target towards 455 levels.
Gaurav, quick 10-second view. Nifty Bank 134 points higher. Would you trade it?
I would. Give some more time. There's a resistance at levels of 28,000, 28,050 on the spot side. Once that is taken out, a 200 point, 300 point up single day cannot be ruled out. I would buy a little bit higher levels, not at the current price.
Okay. Pankaj, Pandey, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time. Gaurav, Chandan, stay on. We'll just take in opening thoughts from you. I particularly want Gaurav's view on Titan, depending on where it opens. But the Nifty 50 about 0.25% higher in trade. The Nifty Bank about 0.5% higher in trade. So good, not a bad start. Let me put it that way. We're working with the kind of fall that the US markets had yesterday, but we are not seeing that kind of an impact as of now. On open at least. Let's wait and watch. Nifty very quickly slips into the red too, by the way. Bring up the mid cap and the small cap indices and see what they are doing. Likely flat. So all the markets, all the benchmark indices start off extremely flat on open today. Bring up the heat map and let's start with Titan. 5% lower. I reckon this takes it to the levels that Gaurav Bissa was talking about. We'll get to that in a bit. But Titan is the top source spot in the session today, down about 5%. Yes Bank about 1.5% for 1.25%. HCL Technologies about 1% or thereabouts, and commodity names like Tata Steel, IOC, ONGC, GAIL, BPCL too corrects further in the session today. So those names continue to remain under pressure, but Titan is the big draw. What's gaining? Tata Motors, not bad. The China sales continue to recover. Maybe that is playing on the stock, up about 1%. Aside of that, we don't really have big gainers, I must say. HDFC Bank marginally in the green. ICICI Bank is holding out. HDFC is holding out. So maybe those are helping the index do okay. Again, not too many losers either. Save for, of course, Titan and HCL Technologies, which is down about 2% on open. Watch out for that one. Very quickly, just a couple of pockets that I want to highlight at the broader end of the spectrum. Firstly, stocks that were in focus on Monday or are trading at 52-week or close to 52-week highs. So Whirlpool, Arman Financial, Spandana, all three. It's starting off marginally positive, which is not a bad thing, save for Spandana, which will get the rates in a bit. And of course, Aurobindo and Glenmark are the diverse moves that we're seeing here today. No, actually, even Glenmark is in the green, but Aurobindo about 3 or 4% higher. So a lot of shorts, a lot of brokerages believe that the worst is in the price and the risk reward is favorable. Let's see if it plays out during the course of the day. Devina, what are you spotting?
Well, we'll start off first with the Indiabulls group stocks and what's been happening out there to all of those names. Indiabulls Housing, Indiabulls Ventures, Indiabulls Real Estate, all of them. Indiabulls Realty on upper circuit. Ventures is up 5.5% and Housing is up about 3% MTNL is down in today's session, about 10% under for that one. Lakshmi Vilas Bank continues to lose steam. In the last 7 days, it's down 23%. Dewan Housing Finance 35%. Almost on a daily basis, you're seeing Dewan Housing Finance going down. HDIL and then Edelweiss. Edelweiss had a big 7% drop in Monday's session, again down 3.5% now at 75. Last 7 days has lost 30%. Piramal Enterprises also last 7 days has lost 22%. Today too is down about 2.5%. IDBI Bank, Oberoi Realty are some of the other losers. Gati is down to 55. You've got JK Tyre down 1.5%. All Cargo Logistics, DLF are some of the names which are looking weak this morning. Aside from that, amongst the gainers, J Kumar Infra, that's doing well, 15.5% higher for that one. So watch out for that. Aside from the Indiabulls group stocks, Aurobindo is up 3.5%. Then you've got the likes of Raymond at 561, 2.7% higher. J&K Bank, Igarshi is up 2.5%. And India Cements, we just spoke about that one, 2.5% higher for India Cements. The breadth of the market, positive. So about 580 stocks are advancing. 466 stocks are looking weak this morning.
Okay. Well, IndiaMart, I think, has gone on and hit levels of 2,000, so do watch out for that one as well. But very quickly, before we get in, Deepak Jasani of HDFC, quick opening thoughts from our experts. Gaurav, Bissa, I want to come to you on Titan. What do you do now that it's open and the way it is trading right now?
Then I'll let a 15-20 minute candle form, but I don't think we are going to see a very strong correction from the current prices. It is approaching the Kijun level. 1170 can be the stop loss. I would buy it, but let it see some amount of stability. I always avoid buying in first 15 minutes of a trade, so let it get over with. But then I think we can see a bounce back sort of coming in Titan.
Devi, now speaking about Britannia, that is starting off as the top gainer as of now. The first 4 minutes is the top gainer on the Nifty. Do watch out for that one. J Kumar Infra is this 16% uptick, so do watch out for that one as well. But Chandan, one quick thought. Aurobindo Pharma, that big gash day before yesterday, up about 3.5%. Would you let it ride, or do you believe, what are the levels that you foresee here?
Yeah, I'm looking at 500 as immediate hurdle. So I'll use any bounce back for the selling opportunity, because most of the pharma stocks has given a major breakdown. And I think whatever the bounce happens, that will be sold in the stock going forward. So I think let it bounce and use the stop loss of 500, sell for the downside target towards 450 and lower levels.
Okay, we'll leave it at that, gentlemen. Thanks so much for taking the time out and joining us and giving us your perspectives. Get in Deepak Jasani, Head of Retail Research at HDFC Securities, joins us right now on the show. Deepak, good having you. Thanks much for joining in. Can't not start off the conversation with what is arguably the biggest reaction of the morning, and that is Titan. Now, fundamentally, for a lot of people who waited for a chance to get into some quality names, does this correction in Titan provide an opportunity to do that, or would you wait for the results to come out and then take a call?
Good morning. The way the larger mid caps are set up currently, I think one should be greedy, but one should be cautious at the same time. One can start shortlisting some stocks, and Titan will definitely be one of the stocks worth accumulating. Yeah, but I suppose staggered buying is what one can do in stocks like Titan. Because the worst news may not yet be out or over for the time being.
Okay. Deepak, what about real estate as a pocket? Would you be a buyer here? I mean, it's very active, and you've seen at least the likes of Oberoi, Godrej Properties, Prestige Estates, all of these names doing comparatively well. Would you be open to assigning some allocation to real estate?
I think real estate is one stock where you will have to do some sort of short-term trading. So for the next, say, couple of months, the space as well as individual stocks look interesting. They could be defensive. It's a bit of a contradiction. But for the time being, they could perform well. And maybe once they perform for the next couple of weeks, then one will have to think about whether they have reached levels from where the further upsides may be difficult. So they are not buy and hold forever kind of stocks.
Okay. You know, J Kumar Infra is that stock which is doing remarkably well for itself. I think SEBI on October 7 said that there is no reasonable ground to believe that there is misrepresentation of financials at J Kumar Infra. It had featured or figured amongst the 331 suspected shell companies, I reckon. SEBI's revoked those interim directions issued in September last year, and as a result of which there's a bit of a relief rally that we're seeing in J Kumar Infra projects. Do watch out for that one. There's a bit of a relief rally in the Indiabulls group stocks as well. So those two seem to be doing okay for themselves. Deepak Jasani, just wondering, within this life insurance space, do you guys, I mean, obviously you can't speak about HDFC Life, I reckon, but the others, the three other names in the listed space, do you have any coverage there, or do you have any preference there?
Yeah, our institutional team has coverage on the three stocks, and at the moment, I think SBI Life looks reasonably valued among the three stocks. The other two are fairly valued at this point of time.
The new listings, Deepak, and I'm guessing you would have come out with those IPO notes as well. But these 3 or 4 names which have listed in the last 6 months just keep on defying gravity and moving up. We've seen IndiaMart now hit levels of 2000. Spandana Spurti has been trading at fresh highs as well. There is traction in a clutch of other names. Polycab, not at fresh highs, but just 20 rupees away from there. Any investment call at the current valuations in any of these names that you may have?
Now, Polycab, we have a buy call. One of our teams has a buy call. As far as the internet companies are concerned, IndiaMart and Affle India, I think both are in specific niches which may do well going forward. And the floating stock in both these stocks is limited. There is visibility of growth at least for the next couple of years, and there is fancy for internet kind of stocks. So all put together, the managements are also worthy of trusting, at least till they make some goof-ups. So I think internet space is very interesting, but for the time being, probably they have overshot their fair valuation, but they should be sort of part of your tracking and buying on dips kind of a situation. Spandana Spurti has very good return ratios and very good cost to income ratios. On the other hand, it is slightly expensive on PBV and other fronts. But the way the management has performed post the CDR, I think they have done a phenomenal job. Microfinance as a space is looking interesting across the board. Valuation will be crucial. So whenever there is a sell-off in this space, I think one should be looking to accumulate stocks in this space.
Anything that you specifically are advising to clients, Deepak, with regards to exposures and where they should have it?
Now, for example, the CGD companies continue to look interesting. This week we had a buy on Gujarat Gas. So that is one space which is defensive, which is where there is visibility of growth. There could be regulatory hindrances, but otherwise I think this space looks interesting.
The oil marketing companies, Deepak?
Sorry?
Oil marketing companies.
Oil marketing companies, now again, whether divestment will happen, not happen, in what way, the manner, mode of the disinvestment will be very important. Some brokerages feel that they are fairly valued at this point of time. But I think in case the government goes for strategic investment in the real sense, then there is some more upside left in these stocks.
Okay. But so what is it then? Would you go out and preempt that and maybe buy a BPCL or IOC, Deepak, or would you stay on the sidelines currently?
I think for the timing, we'll have to watch out for signals from the government as to how serious they are about the strategic divestment, and then probably take a call. For the time being, we will watch the space closely. And then whenever we get that signal, I think even at slightly higher levels, we could get excited.
The financial names, Deepak, 2 names in particular, which have corrected quite severely. And if you have thoughts there, one of them is Edelweiss, which is down another 3 or 4% today. At least on open, it was down. Yes, currently it's down about 4% too. The other one is Piramal Enterprises, which has fallen completely out of favor and currently at about 1408, down another 5%.
Yeah, both the stocks essentially suffer from exposure to real estate loans. And that, I think, one doesn't know when that situation there will sort of unwind, and when liquidity will be available to these kind of companies. I think we will have to sort of wait it out. Even staggered buying in these stocks is a bit risky at this point of time. So whenever we think the worst is over, one will have to do a lump sum buying in these stocks.
I'm asking the converse. If somebody has these stocks in the portfolio, is it advisable to get out of those stocks?
Now that is one question which will all depend on the investor concerned. We interact with our investors on a day-to-day basis. So there are people who will not sell any stock in losses. There are some people who are practical and will get out in time. So probably if you're not exited positions in these stocks and you are in losses, then partial exit is recommended in case you are not too afraid to take losses on your books.
Okay. As we speak, Titan is no longer the worst performer on the index. It's down about, though the cuts have deepened a bit, it's down about 6% but Yes Bank is down another 7% now in today's session. So that stock also looking weak, about 42.5 odd. Deepak Jasani, what would you do with maybe not a pointed question on Yes Bank, but just some of these private banks, Axis, ICICI, IndusInd, and what do you expect in terms of earnings performances in Q2?
Now, as far as private banks are concerned, we are more comfortable with them compared to the NBFCs. Probably there is some more downside left, a little downside left in each of them. But broadly, their business models, their brand values, etc., are quite strong. And whenever we see the economy bottoming out and beginning to rise, these stocks will be the first one to benefit out of that uprun. So here we are a little more comfortable.
Okay, got that. Are we also going to, look a little bit more towards making sure that, the bent in the portfolio, you start accumulating more within the smaller tier basket, like the mid caps and the small cap versus the large cap, and a pocket which has been doing relatively well up until now is the paints space. So the likes of Asian Paints, Berger Paints, Kansai Nerolac, all of these counters, even in this slowdown, while the industrial segment, paint segment has suffered because of what's happening in the auto space, decorative paints have done well. So in light of that and their continued outperformance in that segment, would you be a buyer into this pocket? And particularly the smaller names from the mid-cap space, like a Berger or Nerolac.
No, as I mentioned earlier, I think if you are investor who has to perforce remain invested in equities, then these are names where you could remain invested. Of course, we broadly feel that larger mid caps are the next in line to be sold off. Even the so-called defensives or consumer-facing companies, because the way their valuations have expanded, I think whenever the general economy is going to improve, people will sell those stocks and go to the cyclicals and the lesser-known names. So in that sense, unless you are an investor who is perforce supposed to remain invested in equities, I think one can avoid this high-priced or highly valued consumer-facing stocks at this point.
Okay, Deepak, appreciate you taking the time out and joining us in today's session. Thank you so much for being with us.
My pleasure.
That's the view from Deepak Jasani of HDFC on a clutch of names, really. Fruitful conversation. 0.5% up for the Nifty 50, Bank Nifty rather, which is up about 141 odd points. But the Nifty and the Sensex lying absolutely flat, which is not bad. The US markets were down about 1.5% yesterday. So after the kind of fall that we've seen all over the last 4 days, nearly 4%, it's a bit of sanity right now. Let's see if this lasts. We take a break. On the other side of the break, we get in Atul Lal of Dixon Technologies to talk about whether the Amazon and Flipkart sales have moved the needle for consumer electronics, and talk to George Alexander Muthoot of Muthoot Finance on how business is faring after the worker strike last month.